AI and financial services, risk, reward, and the future of banking. The panelists are Vinesh Ramnarain, Vice President, Product and Solutions SSA, Visa. Dr. Mark Nasilla, Chief Data and Analytics Officer, F&B Chief Risk Office. Portia Matsena, Divisional Executive, Special Projects, Nedbank. Subhash Sharma, Chief Digital Officer, ABSA Personal and Private Banking. And the moderator is Sid Wahi, Vice Chairman, CNBC Africa. Artificial intelligence is no longer an experiment for the African financial services sector. It has become the engine behind the bank system. It dictates how it borrows, transacts, and protects its money. Across the continent, AI is already reshaping core financial functions. From real-time fraud detection and automated credit scoring to virtual assistants or bots and personalized banking recommendations, the financial sector is being redefined faster and smarter. In Kenya, mobile lenders like M-Kopa and Branch are using AI to assess credit worthiness based on mobile usage patterns, not just bank statements or payslips, but giving access to finance to people previously invisible to the system. Carbon and Ayala Credit in Nigeria, fintech platforms using AI and behavioral data to underwrite microloans, process applications in minutes, and serve millions once excluded from the formal financial system. In Rwanda, the Bank of Kigali has introduced AI chatbots for customer service, allowing rural clients to access banking services in real time in local languages through mobile platforms. In South Africa, banks like Nedbank, Discovery Bank, FNB, and TymeBank are deploying AI to enhance customer experience, drive down operational costs, and offer smarter digital services at scale. Meanwhile, startups across Nigeria and Ghana are using machine learning to tackle financial fraud in real time, protecting users in a region where digital transactions have surged dramatically. African regulators need to move fast enough to protect users while still encouraging the innovation the continent needs to create a system that will be unbiased, efficient, inclusive, secure, and trusted.
So today we're going to look into how tech innovations are reshaping core banking functions. So everything from risk management, credit scoring, fraud prevention, enhancing customer experiences, and of course, financial inclusion. We'll also look at some policy questions and look at how banks are balancing innovation with compliance. And also, what does an AI-first strategy look like for banks in Africa and beyond? And how do we make sure that it benefits everybody? So with that, I'd like to get the discussion started. So this is for all of my panelists. I want you to, in one or two sentences, and that's my prompt to you, tell me what are some of the most exciting opportunities that AI brings, and what are some of the biggest risks and challenges that keep you up at night? So let's start with Vinesh, with you.
Sure, thanks. I think when you look at the opportunities, I mean, you've got over 500 million people across sub-Saharan Africa that are either unbanked or underbanked. So this is an opportunity to bring those consumers into the banking sector, to educate them, because bringing them in is one part of the journey, and that's what it is. It's a journey, right? You bring them into the banking sector, and then you got to take them through a journey so they know what to do. They can activate on their accounts, and bringing people into the digital financial ecosystem, uplifts everyone everywhere. So that's the length and breadth of the opportunity. If I look at what keeps me up at night, I'd like to say a robot chasing me down, but to be serious, if we look at the risk that comes with AI and the misuse that comes with it. Sure. But on the other side, it's about balancing risk with experience. And far too often, we go the risk route and we stop transactions because we believe there's a risk. But we've got to balance that because not all consumers are bad, right? So you've got to make sure the experience and the risk is equally balanced. So I think for us, it's maintaining that balance at all times with the ecosystem, to grow and flourish.
Thank you. That's actually very interesting. So you touched on sort of fraud prevention of fraud and bad actors, and of course financial inclusion, which is definitely something that we're going to dig into. Mark, your thoughts?
Thanks. When you look at the nature of the transformation being driven by AI today, it's very different to previous technologies. If you go back to history, the value proposition of banking has remained the same from the 50s, where it was a place where you could move money, borrow money, or store your money for safety. The ATM came, online banking came. We now have cell phone banking. But AI is almost revolutionizing banking and selling context. So these products are sitting behind the technology, and therefore, it's an opportunity to drive more efficiency, to drive the digital expectation and the experience, an opportunity to be proactive and understand what are the leading indicators that influence banking and customers much better, but also to integrate to other services beyond banking. We must go without saying that a lot of customers do not get banking products because they primarily need banking products, but because of what they're going to use these products for. So this technology is making that very, very efficient, as well as working in a collaborative way with other industries. What keeps me awake at night are two things. One, is missing out on this revolutionary transformation and just using technology to automate things and drive efficiency. Because if the banking industry is just going to automate things, we're going to miss out on opportunity to diversify and come up with better products. The second part is just risks that we're likely to be introducing within organizations. AI, while has got so much opportunity, we've got ethical concerns, data, as well as just cultural consideration of how people can work with the technology to empower organizations.
Well, I'm very glad you mentioned the cultural issues because that's something we're going to talk about a bit later as well. Portia, please can you give us your opportunities and challenges?
Thanks, Sid. For me, I'm looking into the high unemployment rate that currently has been experienced within the country and within Africa as a whole, to say how do we as the bank play our role in this and ensuring that we also assist in ensuring that people get jobs, and that's through township economy. And then how does the bank support township economy? How can we then use AI to assist us in ensuring that we let those, when you're talking financial inclusion, you're also looking at those township people because initially they were excluded from the financial decisions and financial markets because of how they bank and how they run their finances. But now it's pivotal for us to look into how then do we bring them into the economy. And tools such as, or technology such as AI can help us, but at the same time help us how? When it's dependent on the data. Are we sure that the data that we're going to be getting to assess the credit worthiness of these individuals or these people that are running the township economy that were initially excluded within the sector itself? How then do we help? How does AI help us to make informed decisions and make them come into this economy and participate? So what makes me sleep at night is the number of unemployed people that can benefit from the economic sector that is being neglected by the banks.
Amazing. So I'm glad you mentioned data because that's something that is it's the fuel that really powers AI. And it's something that we need to spend a bit more time talking about. Subhash, please tell me your opportunities and the things that keep you up at night.
Yeah, I think from an opportunities point of view, it's hard for me to say one thing.
Sure.
Because when you're old enough, like my age, you probably realize you've been there through the birth of the internet, you've been there through the birth of the mobile phone, and you've seen how these emergent technologies just changed our lives. And I think we are now at the cusp of that again. So to look at the opportunities for AI in just one or two things, I don't think that is doing it justice. I think we're on a wave of something that is now going to change the way we see things dramatically. And therefore, it will affect everything from new revenue opportunities, new customer experience opportunities, the way we see fraud, the way we see everything within our lives, I believe AI has an opportunity to be able to shift that. In terms of what I think keeps me awake, or what I think are some problems, I think firstly, the technology is there. Technology is not lacking. The technology is actually leading the way, and we are seeing large amount of experimentation. We are seeing very rapid evolution of the technology. What I think is missing is that the rest of our organization, the rest of our setup, is still possibly lacking behind or not keeping up with the pace of that level of evolution. So to be able to truly take advantage of the technological evolution, it needs the bringing together, like we said, about data, about risk, about compliance, about how we bring all of those aspects, how we organize, how we train, how we use all of those things to make the ambition of AI realistic. Because ultimately, our goals are still the same. We have to do well for the people that we serve. And using the AI as a tool to be able to achieve that objective is what our focus must be on, but we need to shift faster how we are organized and how we process things to be able to take advantage of it.
Okay, so you make some interesting points, and I think we'll stick with you for this. So what I'm hearing is that there is a human element which sometimes could become a challenge as well from an adoption point of view, right? And do you feel that we have the skills that are needed and sort of in order to really thrive in this new world of AI? And the second is that, do you find within your company resistance from either your employees or from the governance boards or even from executive management in rolling some of these new technologies out?
Yeah, I think the way I'd like to answer this is, if you think about what has come before, so when we didn't have internet banking or we didn't have mobile phone banking and so on and so forth, as we go through these technological transitions, there's a certain proportion of the population that will run to it, almost demanding it from day one. There is a certain proportion of the population that will be indifferent. And then there's some that actually need more convincing. It is up to us to do the work to be able to bring people along in where they find themselves at that particular point in time. So I'm quite confident that as we go through these particular waves, we've done this before, so I'm therefore quite confident that we will be able to do that in the future. To be able to say, do we have the skills right now? The answer is no, we have to work on that. But am I confident that we can overcome? Because as a human species, I see we've overcome so much throughout our history and throughout our evolution that my belief is that we will evolve and meet the demands of this wave of change. What is quite important for us as organizations and as industries is to be able to create the support systems that is needed to bring all our people along with us.
Okay, absolutely. Thank you for that. Portia, so I just wanted to clarify, your title is actually Divisional Executive of Hyper-Automation, and what we had there was wrong, so apologies for that. But I know that you have a lot of experience in RPA and designing processes and automation. So can you just maybe walk us through two things? One is, how do you balance the human element with optimizations? Okay, well, you know what, let's stick to that. I think that's already a pretty loaded question.
Before you complicate it.
Yes,
yeah.
Exactly. I have a tendency to overcomplicate things.
All right, how then do we balance the human element? So what we did at Nedbank, for example, we needed to look into how intentional are we in ensuring that we adopt automation? And that is why we said, if we're intentional, we've got to let this come into our income statement. And then that means we're intentional. But for it to be intentional, you've got to now make the employees to understand that this is something that is part of us, is part of our legacy, is part of our future. And how we went about it, we automated. We actually built a workbench which we called it Idea to Impact. So with an idea to impact, basically what it does, it takes your idea as it is and eventually runs it until it makes an impact into the environment. And it does it draws your epics, it does your business process engineering, it does everything for you, it designs that idea for you, eventually it goes into development, and that is AI throughout. And it was a journey, and you talked about skills, which I would want to touch on it. And it's a journey that none of us understood what we were undertaking. So we had to partner. Partnership is very important when you're undertaking AI initiatives. On your own, you will not achieve. So we had to partner with the industry to build this capability that was the first of its own within the banking sector to take us from idea to impact. And how we scale the people, they were part of the journey. And that is how we are reskilling, because we're recognizing that initially I needed business process engineers for this idea, probably 10 business process engineers. But when we went through the AI process, I only needed 2. Only 2, meaning the other 8 will not be necessary. And what happens with them? And that is why you need to rescale them in the process of AI to say, there's a lot of things that you can do, because when you're talking AI, you've got to have the human in the loop. So when you're running artificial intelligence solutions or any other, there must always be a human in the loop who's the subject matter expert. And I love what one of the professors said, to say, you cannot run this on your own. You've got to have a human in the loop, because those are subject matter experts and they have the knowledge. The knowledge, it doesn't necessarily mean it's coming from the AI, you train it. So as eventually, when you're running them autonomously. And as you're running them autonomously, when you realize that the output is more credible than what you expected, then you have the human oversight. Then it becomes an oversight. But in our industry, there should always be a human in the loop, because those are the ones that they can discern between what is right or wrong, how you're rolling it out ethically. Is it governed by certain regulations and whatever? That's human oversight. And that's how we've went about it. And I'm excited to say we are one of those that are leading in that sector.
Thank you. So I just want to ask you a follow-up question, and I'm really glad you said human in the loop, because I would have imagined we would have heard that a lot more today, but we haven't. But we did hear a lot about the word experimentation. But coming back to the human side of things, so obviously when you have these efficiency gains and you don't need as many people, you have to try and reskill them. But one of the points made earlier today is that realistically that might not be possible. So what is your view on the human capital requirement for financial institutions in the future?
Yes, so what we've done, we started with group technology, which I'm within the group technology. We looked into what are the future skills and how do we future-proof our environment. And we were clear, for example, business architect, are they still relevant within the industry? Not necessarily. Business process engineers, they are, but not the number that we used to have. And how do we then future-proof their skills? So we're looking into partnering with the various industries to help us future-proof. But eventually, we're doing so sensibly and responsibly. But eventually, there will be a point where, and I think I love the professor who said, will there be people that lose their jobs? And he said, people, a biologist, and he spoke about a biologist, you'll never get a robot going to the field and doing biological work or whatever. There's those kind of things that you'll have somebody, a human, who interacts with a customer, because a customer wants to interact, and you'll not find a robot interacting, because a robot is trained in a certain manner. So the customer is able to then bring in that human element into it. And those are the things that we are training. Yes, we might lose jobs, but I don't see them in those quantum leaps that we'll be losing.
Thank you. Mark, so in our opening sort of address, you said that efficiency is a big opportunity. So can you tell us how you're using Gen AI tools, or even, so it's important to sometimes differentiate between Gen AI, which is a relatively new thing, and then AI and machine learning that has been around for decades and banks have been using it. So maybe walk us through what is happening at FNB and where and how you're using these tools in whatever area you think is most important.
Thanks. So I look after the data and AI strategy in the risk management space. And while ChatGPT and generative AI have been very topical for 3 years, actually our first applications of generative AI was around 2019. Now, in terms of context, in risk management, we have to identify risks. Then we have to assess the risks. Then we have to make decisions on the risks. But these have to be very timeous depending on the nature of the risk. In identifying the risks, we've got traditional algorithms that identify these incidents so that people can make decisions. And the role of these algorithms is to identify them accurately so that people can focus and make decisions on where the risk is. So in some instances, we've got algorithms that have a false positive ratio of 1-to-1, which means that for every 2 transactions or 2 incidents, one of them is correct, which is actually magnificent. In other words, they're making decisions on the right cases. You won't believe it. In the last financial year, we prevented over 2 billion rand worth of fraud at the time it was happening. In other words, without these algorithms, we will not have been able to stop it because money moves around so fast. Where generative AI has played a role is in the assessment process. We've got what's called the regulation around reporting suspicious transactions or high-risk customers. This involves us writing reports. In other words, if Mark is suspicious of something, you've got to put together evidence and write a report. And this used to take long.
I can imagine.
Can you imagine writing a 200-page report? We've reduced this from months or days to almost 20 seconds because the AI gathers all the information and puts together. But these were small language models. We do about 200,000 a year of investigation. So you identify them accurately, you consistently and put together the context using generative AI, and then you make decisions much faster and you end up promoting desirability. The teams are working on there's other streams like, for example, credit reporting that are investing a lot in generative AI as well as chatbots. But we're basically redefining the processes of banking by driving efficiency and streamlining everything.
Sure. I think credit scoring is an area I want to come back to because it's, I think from a financial inclusion point of view, there's some interesting points to talk about there. Yeah. But before we go there, Vinesh, I want to just stick with the fraud prevention side of things. So Visa, and please correct me if I'm wrong, but Visa processes over 120 billion transactions a year. Does that sound right?
260 billion.
Okay, yes, 260 billion. See, that's why you shouldn't get ChatGPT to do your research for you, right?
It's outdated.
It's outdated. Yeah, sure. And AI is scanning 100% of those transactions in milliseconds. I got that right?
Yeah, so.
So can you walk us through how that happens and maybe you could share some insights and data with us on
Yeah, sure. And I'll build on what Mark just mentioned here about the data model. So Visa uses machine learning as well, and for the last 30 years, Visa has been using AI in different and over 100 products across the Visa stable. Now, when you look at risk specifically, and there's two parts to it, right? So there's the authentication. It's who you say you are, right, when you're making a transaction. And then the second part of it on that transaction is the authorization, looking at the different variables on there and making sure that, and sending a score to say that you think this transaction should be approved or declined. Now, what happens is, in the 260 billion transactions get run through this model, and each one gets a score, right? And that's on the authorization leg. But when you look at the authentication piece, right, and most of this happens online, because you need to verify yourself, because the internet was never designed to identify a human. Sure. It was designed to communicate information. And then we force-fitted it, to do transactions, right? And fraudsters have realized that, so they moved away from the transaction to your identity. So now they target your identity. So you got to manage both of these aspects. And when Mark was talking about the false positive ratios, you've got to balance that. Because the last thing you want is for a good customer to have a bad experience.
Absolutely.
Because then it's gone. So the models will start to look at all of these transactions. There's over 500 different attributes that they look at. And then they start to score these transactions and give in real time to our clients, that score. And if a client has a different fraud solution, we could pass that score to them as well, because we've got 260 billion transactions that we are scoring. Now, you've also got, static models, right? It's like locking your door and leaving all your windows open, right? So the fraudsters will get in,
sure,
right?
Yeah.
So if you're not using AI and you're not using that real-time decisioning, you're basically leaving a gap for fraudsters to actually enter. But let's go into the authentication side, right? You've also got static models on there, where you try to make a transaction, they'll send you a one-time PIN, usually called 3DS. You enter that PIN, and you start to, okay, that is me, right? But fraudsters have realized that, and they said, okay, we're going to intercept that. We're going to get this. We're going to try and do a SIM swap. We're going to take that from you. So at Visa, we use adaptive, multi-layered authentication, okay? Tokenization is one piece of that. The other piece of that is using cryptograms, right, in that authentication process. Now you're building layers for this fraudster. It's like your house, right? You've got a wall, you've got electric fence, you've got your beams, you've got your cameras.
Got the windows and
you've
the
got
doors,
layers,
yes.
right? And there's also cameras that have AI built into it to say that's a human or not a human. It's the same thing here. So the model will start to run and give you a risk-based authentication score to say that it is actually you who you say you are.
Right.
And Visa has been doing a lot of work around tokenization. It's foundational because it's removing the credit card number out of the transaction, replacing it with a token. And that token is device-bound or it's domain-bound, meaning that if it comes from Netflix, it's only valid for Netflix.
For that
For
transaction,
right?
right?
And you provision into Netflix, right? So you put your card there, we take the card number out, we replace with a token.
Understood.
Right? So
Yeah.
if a fraudster intercepts that transaction, using it anywhere else is worthless.
Yeah, exactly.
Right?
Perfect. That's a very, very interesting use case. So while we're still on the subject of security, Subhash, I want to ask you this question. So Sam Altman recently said in a podcast that he's very worried about fraud in the banking sector because the dual factor where you use your voice as a password is now very easy to defeat. So I could go online, I could listen to a podcast that you've done, take a segment of that clip out and then replicate it and essentially impersonate you. So how do you get around things like that? What are some of the security considerations that you are looking at and need to think about?
Yeah, I think, first of all, the way he explained it is you can't think about fraud and security just in one thing that you do. It has to be layers. So for us, two-factor authentication is something that is quite standard, especially in mobile banking. It is part of that security layer. But you are seeing these days the key vector that you see in the market is because of the significant level of technology that has been put into building those security systems, fraudsters try to do phishing methods, so they try to go after the human. And what we do in those cases is we use AI data models that look at behavior of the customer. So it looks at how you log in, where you log in from, how frequently you use, the speed, et cetera, et cetera. There are not millions of variables that go into real-time monitoring that builds a behavioral profile. And so real-time transactions, when they're going through, is assessed using those data profiles. And when one thing the fraudsters can't impersonate is the behavior of the actual customer. So that is something that you're working towards. Another layer is you've got to make sure, especially on your identification system, on new account opening process, is that your deepfake ability to detect deepfake and to prevent deepfake must be in place. So the solutions that we use are designed for that and tested to ensure that it cannot be spoofed by deepfake.
Mm-hmm. Understood. Mark, again on this topic, because I think it's a very interesting one, bad actors, and Subhash mentioned deepfakes, bad actors and essentially the cybersecurity teams and the defenders are using the same technology, which is AI. So how do you stay ahead of bad actors? We've talked about the multi-layered security, but is there anything else that we're missing and we haven't touched on?
Yeah, I think two things. The first one, I think it's even more important to leverage traditional human ways of bolstering security. If you leave security to technology alone, then you're leaving the whole, issue of preventing or identifying things to fraudsters, because now they have got access to everything. So we've got traditional ways of, verifying identity or transactions, two-factor or even voice that are still relevant. But most important is to involve everyone in understanding how loopholes come in place. So today, if you have card fraud, it doesn't just start at that point in time. If there's an account takeover, there's certain leading indicators. For example, information might have been compromised somewhere, or a customer might have compromised their card. So those, all of them can represented by data, and algorithms can help identify that as leading and indicators of something likely to happen in the future.
It's actually painting a very clear picture now. So it's not just one thing, it's multiple things.
Exactly.
It's things that you can do on the front end, things you do on the back end, and then, of course, the human element as well.
Yes.
Portia, let's move on to another topic. Let's move on to financial inclusion. I think there's a big opportunity for generative AI and AI tools in general to help service underserviced communities. And I think, Vinesh, you mentioned 500 million unbanked customers. So how do you see this technology being used to onboard the missing 500 million unbanked into the traditional banking system?
Yeah, I think it goes back to some of the discussions that were held this morning, and even the professor that was here talking about cloud from the UJ, to say, how do we bring in the unbanked? Bringing in the unbanked into the banking sector requires us to train, the data to be trained, and people to be trained, LLMs to be trained on what is it that we are targeting. Because remember now, the data that is sitting out there, that is out there in the townships, in the rural areas, is the data that we do not have within the banks. So we do not understand what is out there that can help us to make decisions of this individual. So it becomes very difficult to be able to make and include them in the financial sector, because there's certain categories that you need to pass through for you to be included within the financial sector. We've got to look at your income statement, we've got to look at those. And if you look at these people, even their businesses, they don't have those kind of, they're dealing with cash. So you look at the society to say, how then do we get out of this? And that is why you see the government trying to get out of this cash society, so that then they're starting to build profiles for these individuals that need to be included within the financial sector, so that we can start learning their behavior. But for us to understand it, I think AI can help us to now start understanding the behavior within the townships or within the rural areas, so that with that behavior, then we're able to include them into the financial system. But without the behavior, it gets very difficult. And also that is where human in the loop is, because you've got to now go and get the data out there to bring it into the systems, so that you can train the systems to learn about what is happening out there. So those are some of the things that you channel your service center people from now being in the branches, to rather go get the data out there, so that you can include those that are financially excluded.
Understood. So there's also a large component of using non-financial data, perhaps, right? And I think that's interesting. There's some interesting sort of points to talk about there. So Mark, maybe can you help us understand, when you are using AI or even machine learning models to make decisions around loans, how do you make sure that biases don't get into the decision? So based on gender, race, or whatever.
All right. Maybe I'll go a bit back. As part of financial inclusion, it's also making sure the technology is at the center of making products available. An example I've always used outside financial services, when Uber launched, more than 60% of Uber drivers will not be onboarded. And the reason for that was that those were yellow cab drivers who actually did not have a bank account. What Uber did was to leverage technology to digitize the process, so that through the Uber platform, you can actually have end-to-end onboarding and access, the platform, including opening an account. This is what we're also doing. For example, our e-wallet products, and a lot of banks today have got e-wallets, especially for the non-banked. It's a way of making products accessible. Then when it comes to credit scoring, I think it goes without saying that the traditional scorecards do not cater for customers who do not have traditional data. In some countries in Africa, over 80% of businesses cannot access credit. And it doesn't mean they cannot afford it. It means that the approaches that we have are either not sufficient, or they just don't have data. And AI today provides an opportunity to not just leverage alternative data that is out there, but to also take away biases in the traditional approaches that prevent organizations. So you go to, for example, companies like Wemimo in Canada, that instead of using traditional data to use to provide credit, they use rental income. Yeah, because if you can afford your rent over a certain period of time, it can correlate to your affordability of to repay debts. Things like, for example, your municipal bills, your cell phone data usage can also correlate to your affordability. You've got your purchases of groceries also can demonstrate your ability. Today, young people struggle so much because they're being asked for credit record, yet
They don't have it.
they don't have it. And then when it comes to bias, the whole process of AI development is a series of human decisions. And the way and bias is very complex. It can creep into technology at any stage. If you misdefine a problem, the outcome can be biased. So the way you even define affordability, if you misrepresent that definition, the way you solve it ends up being in a biased way. Then data scientists also have to acquire ethical skills so that they can, for example, de-bias data sets. Today, technology is so mature that it can help us even create synthetic data so that where you don't have sufficient data, you can create data so that the data you have is representative. A lot of bias problems come from the fact that data is historically not representative. And then the way you implement these scorecards, as well as the way you offer them products, can also lead to bias outcomes. So there's a combination of things. Once, organizations like ourselves, we've put in governance frameworks for proactively preventing bias, but also we need a bit of a cultural shift. So not just a data science process, but an ethical one.
Sure.
A one that is linked towards the center of the customer you're developing the product for.
So who has more inherent bias? Would you say a human loan officer or a programming error in a computer program? Where do you see more, who would be more biased?
I think when you look at traditional cases, data scientists have been traditionally more biased because they are at the center of manufacturing intelligence.
Sure.
Yeah, so they either select wrong algorithms, they either do not interrogate the data properly to make sure that the data is representative, or they just misdefine the problem. And that part is always core in the value chain of AI development.
Sure.
Yes.
Okay, I think let's move on to the potential for using AI in areas like customer service and just improving the customer's journey with the bank. So Subhash, we started having a conversation backstage about some of these things. So can you tell us what ABSA is doing in this regard, and how has that moved the needle?
Yeah, I think as we start adopting more and more of technology, as you said, we've been using large language models, some of the machine learning algorithms for many years from fraud detection. And then as the technology evolves, we've been experimenting and then launching real customer solutions where we're starting to use more and more of the technology. We currently work both from customer-facing solutions that help the customer directly implement transactions and fulfill transactions, but also assist the colleague to be able to help the customer in a better way. I think some of the key challenges we find in being able to do these things is as we evolve, it sounds quite simple, just implement a bot. And then we find that we don't have enough data or we don't have enough content to be able to train the bot. And it's not just about having content, it's about having the right content at the right quality to be able to get the right outcomes. And then when you try to solve the content problem, you say, well, it takes too long to train a typical large language model. Let's use a Gen AI model. And then we start getting things like hallucinations and how do we know in terms of how our friends said about compliance. So if we have to execute a simple financial transaction like we're doing an international payment, there's a transactional leg where you have to interpret and be able to make that happen. But there's a compliance leg, there's a tax accountability leg, there is a compliance, a regulatory accountability leg, and so on and so forth. So with agentic, what we are seeing these days is we are having to build multiple bots, almost like a marketplace, where one bot is actually used to do the transaction, and then there's a compliance bot to check up on that transaction, and then there's another bot to check up the bots of the bots of the bots. But it sounds funny, but I think for us, it's still, there is a lot of use cases, and we're seeing great success in some of the outcomes that we are driving. But there's a world of opportunity out there, and we need to experiment safely, but also shift our internal operating models and how we do things to be able to do that in the right way.
Fascinating. I think, again, it goes back to that saying, fail fast but fail often. Fail often but fail cheaply, and then learn from your mistakes and iterate and roll out as fast as you can. Portia, when we spoke a few days ago, you were telling me a little bit about the bot that you had built as well, and you've had a limited rollout, but there's been some interesting insights. So can you share some of those insights with us?
On the ongoing due diligence.
On I believe it's the NB bot?
Oh, okay, the NB bot. Okay, yes. So I think it goes back to Subhash to say, when you roll out the bot, there's information, there's limited data that you can get to train it on. And that is why now we're starting to onboard agents. Because with the agents now, that is where now you're starting to adopt generative AI, which also you can fit it with the content, and it complements the stuff or the NBI. The NBI is literally a chatbot. Now we are advancing the chatbot from being a chatbot to an agent. An agent is more of a human persona of Portia that we bring it into the system, and then it augments a Portia. So that's how then we are evolving our products using agents to complement the current.
So would you say that you're generally seeing a net positive outcome, either from an efficiency or cost-saving point of view with some of these things? You say yes.
Yes.
Yeah, we are seeing significant reductions in call center volumes, as an example, as one metric.
Sure.
And I think Abby has now 1.2 million users.
Wow.
So
you said 1.2 million users.
yeah.
Wow, that's quite impressive. Vinesh, can you tell us about Visa Intelligent Commerce? How does that work? What does that world look like?
Yeah, sure. I think for the audience, just to understand that, agentic commerce is happening today. People are using agents to shop. If you look at Shop with Pro by Perplexity, or Operator by ChatGPT or OpenAI, the transactions, or not the transactions, the experience is there. Right? Consumers are using it to make purchases. If you take South Africa, for example, we've got some agents, but not as many as the big players that you're seeing out there. And this is making people's lives a lot more easier, right? And if you take, for example, and I'll take myself as an example, right? So my family said, last year you did not take us on a proper holiday, right? So I said, define proper holiday. So it was local. So they said, this year you got to take us somewhere. Where are you going to take us, right? So they gave me some options. So I phoned the travel agent and I said, this is what I want to do, and help me out. So, and then I went into and I used ChatGPT and I said, this is where I want to go, and give me the experience, right? And this is what I want to do. Within 10 seconds, I had a full-on itinerary. When I went for the agent, it's 2 weeks and I'm still waiting, right? Now, so what's happening is consumers are moving towards AI. They're using it more to shop and to do their discovery and research and to make those purchases. Now, with some of these platforms, you're seeing that discovery process is great. It's the best experience you'll ever get. When it comes to the payment, they send you to a website or they send you a link and you got to go make that payment. So you have a world-class experience with a very bad payment experience, right? So, one thing Visa is good at is building ecosystems at scale and understanding the rules and the different players. So while this ecosystem is starting to grow, so Visa stepped in and said, you know what, this is happening. If we don't build that trust layer, you're going to get fraud creeping into the ecosystem, and then we're going to have a bad experience for everyone, and it's going to decelerate. So working with partners like Perplexity, OpenAI, Mistral, and a few others, together with the Visa teams, we said, okay, how do we understand this ecosystem, and how do we manage this? And similar to know your customer, we said we need a process to know your agent. So we need to understand who they are, who they belong to, how do they operate, and set some rules for them. And there was an instance in the US where a reporter actually made a purchase using one of these AI agents and said they wanted eggs and needed delivered fast, and half a dozen eggs. The agent went off and purchased eggs for $50. Where do you get eggs for $50? We said
organic, maybe.
Yeah, maybe golden eggs. But anyway, there were no rules there. Right? The agent didn't know, okay, this is the budget, this is when I want it delivered, and all sorts of stuff. So there are two parts to the program on Visa Intelligent Commerce. So one was know your agent. Register with Visa, we know the agent, we set the rules, and together we can open that ecosystem. On the other side of it, there was 5 APIs that were created to actually control the experience. So one was tokenization, which I spoke about, because you do not want to give an agent your card
Credit
number
card, sure.
or a rogue agent, right? It's going to go off and do its own thing. So you got to lock that token to that agent. The second thing is, how do you authenticate? And when you go into this platform, you want to enter your details. You want to know it is actually Sid that's in this. So, using biometrics to authenticate you. And I spoke about multi-layer authentication. The third part of it is, how do you set rules? So for my holiday, I said, okay, I want to spend $20,000. It's not going to get me far, but I want to go on these dates. This is how much I want to spend, and these are the destinations I want to go to. So you set those rules into the system so the agent knows. And then you got to send a signal back. So Visa checks that transaction to say, okay, the customer said you want to spend 20,000 rands. Okay, you spending 30. No, you can't do that. So you got to manage that. And then the fourth part of this is, how do you get hyper-personalization, right? Because you don't want random stuff coming. So a product called data tokens, which Visa created using AI, it creates this persona of a person. So as Visa, we don't know it's Sid, but we know your persona. We know you like to fly Emirates. We know you like to go to Marriott. So we use that to start presenting offers to you. So it's got hyper-personalization, and this controls the whole ecosystem.
So you got both of those right. So I'm beginning to wonder whether my transaction data with Visa is really private or not.
Yeah. I mean, it's important, right? So even with data tokens, it complies with all of the regulations in different countries. You as a consumer can choose to allow the agent to see that those attributes of this personas of yourself. Absolutely. And you can stop it at any time.
Absolutely. Some interesting points to talk about data privacy and data sovereignty, but I don't think we'll have time for that. I do want to ask Mark a question, though, about your book, African Artificial Intelligence, right? And you argue that Africa must rework and refine AI to meet uniquely African challenges. So what does that mean in practice for financial services and perhaps for the industry at large?
So the value of AI comes from what you do with it and how much you do it with it. And Professor talked about having strategies that articulate clearly where AI is going to play a role of efficiency or drive digitization and all those other benefits. But when you look at this technology, it's not just an evolving technology, it's transforming industries, it's driving economies. But Africa has a culture of importing already made products. In other words, there's always a mismatch in the potential of what we can use it for versus what those solutions provide. Our challenges are very unique, as well as our opportunities. Also, the way we need to empower people to work with technology is very different. We talked about financial inclusion, investing in industries like agriculture, and empowering people there. It's very unique, and strategies that support that must be unique. So the book is about that. There is no blanket approach. But also, beyond that, we talk about sovereignty. America at the beginning of the year invested $500 billion in this target project. Europe followed with $200 billion. They did not do that so that they can be efficient or so that they can be productive. They're looking at it as the next frontier of manufacturing and industrialization. You won't believe it. 9 out of the top 10 countries, all-time manufacturers, are the leading investors in AI. Because the value chain of AI goes beyond just efficiency. When you host a data center or an AI factory, you also create opportunities. You drive modernization. You maintain the culture, like Professor said, but also you manufacture intelligence, which you can sell out there. We've always exported natural products. That's why when we have tariffs, we suffer so much. We actually need to change and manufacture outcomes and sell outcomes and protect data, which is a natural resource. And the book is about grabbing this opportunity, which is very unique.
Well, they say that there's no tariffs in the virtual world. So
exactly.
So I think perhaps we can do one more question. Portia, so why don't you tell us what are some of the challenges that you've seen with AI adoption at Nedbank?
I think the adoption was more on using the tools that we have deployed. And the reason being, people were scared that they're going to lose their jobs. So an example is GitHub. So when we rolled out the Microsoft GitHub, that was a developer tool. It helps in automating the development and augmenting the development skills that we had. And the adoption was actually sitting at 0.1%. And we invested so much on those licenses. And it's because we realized that it was change management, more of change management and bringing them on board when you do such deployment so that they understand the value that it will bring. So it becomes more of augmented intelligence rather than relieving them of their work. So that was the challenge that we had, to say, if you don't bring people on board when you're building such solutions, chances are they will not succeed, they will fail. So you've got to walk this journey with everyone within the environment.
Wonderful. So we have about 120 seconds left. So in 30 seconds each, can you just give me your one-line takeaway for what you're most hopeful for with AI in Africa? Let's start with Subhash.
Yeah, leapfrogging.
Yes, I will take it. Amazing. Portia?
Opportunity, let's rather say AI in Africa, it's empowerment to Africa.
Wonderful. Mark?
I would think of humanizing it.
I couldn't have said it better.
Yeah.
Mark? Sorry, Vinesh?
I'm trying to think. I think it's about inclusion.
Amazing. So thank you very much to my esteemed panel. This was a very insightful conversation. I had an amazing time, and I'm sure the audience really benefited from your insights. So with that, I would like to hand it back to you, Alexander. And thank you once again to my panel.